Hi, everyone. If you're starting to question the system and want to protect what you have earned, you will want to download our free Gold and Silver Protection Guide. It's a clear, easy to follow resource that explains why gold and silver have stood the test of time and how they can help you build real financial security even as the dollar weakens. You'll learn about which metals to consider and the plan that best suits your needs, not Wall Street's. So click the link or scan the QR code to get started today. You're not going to regret it. Could gold trigger the next financial crisis? Well, the ECB, the European Central Bank, is sounding the alarm that yes, it could. It says gold's run up, briefly topping 3,500 an ounce last month, is now on the radar of the ECB as a possible threat to financial stability. In a note ahead of its broader risk report, 4 ECB economists warned that gold markets, often praised as a safe haven, could become a financial landmine under political stress. Why? Well, they say it's a dangerous mix of concentrated trading, leveraged bets, and opaque over-the-counter deals. Joining me today to dissect this further, Frank Holmes of U.S. Global Investors. Frank, always good to see you.
Lovely to see you.
Look, Frank, we've already seen the cracks, right? Earlier this year, U.S. tariff fears triggered a rush for physical gold, clogging up the Bank of England's vaults and forcing bullion to be recast in Switzerland before being shipped to New York. As we know, that distorted trade flows and revealed just how fragile the gold supply chain could be. So according to the ECB, if market shocks return from more tariffs or unexpected geopolitical escalations, margin calls and delivery problems could spread chaos far beyond the metals market. The point is, the ECB seems to me is very afraid of gold right now. How do you interpret this, Frank?
Well, the ECB is afraid of gold as much as they are afraid of Bitcoin. They're both decentralized assets, and in them rising, it creates an instability in their policies of printing money. So I think it's much more of them being anti anything that's decentralized, that is some form of portable wealth. Gold is physical, tangible, portable wealth, and Bitcoin is virtual, but it's portable. And you have the same argument that they go against both. And we've seen this also with the Bank of International Settlements. It's just how they are. They believe that they're the wizards of the world and they know how to print money. They're smarter at modern monetary theory than anybody else. And these assets like gold shouldn't be in your portfolio.
What I find interesting, Frank, is that they even, felt the need to put out a press release on this saying, gold could create this chaos to our financial system. But we've seen how central banks are buying gold at record speed here. So they're saying, oh, watch out for gold. But at the same time, central banks around the world are hoarding gold.
Well, everyone's accumulating because they want to create credibility for their paper money. If you don't have gold as credibility, then people don't trust that paper money. And that's what we're dealing with. And I think maybe they lend out some of their gold. Maybe some of the countries and economists that write this piece of paper had lent out their gold, and now they're worried that their gold is going to get called away from them. So they create this sort of negative narrative to have it sold down. I don't know, but I do know, and we all know, that there's a big push by China for de-dollarization. And that is the most significant battle. And in addition to that, they have one road, one belt. A lot of people are not aware that the Chinese under Xi Jinping has been absolutely brilliant, and he's lent out over $2 trillion. There's 195 countries, but over 125 have borrowed money from the Chinese. And then they turn around and start buying seaports. Forget the Panama Canal. They have seaports all over the world now. They have invested in something like 90 to control global trade. And then they have their own shipping company, and then they could put surveillance in the shipping company and put it in their ports, all these ports, to be able to monitor what the U.S. is doing. Well, and then they attack the U.S. dollar. Well, all these things all of a sudden start to cumulatively add up. That gold is, what central banks are saying, we have to have some gold. And look at Turkey. They're smart to have gold because their currency hit an all-time low last week. And citizens there, they're big into physical gold. You go to the bazaar, there is spectacular to see, but there's 24 karat gold jewelry everywhere.
I just think, again, it's interesting that they're trying to paint a picture that gold is possibly broken. But what it's really showing, and to your point, Frank, is that the financial system is broken. And gold's just sounding that alarm.
It absolutely, and there are continuous. If you see this century, and a lot of non-gold investors are not aware that gold has been positive 84% of the time. And it highly correlates with G20 countries practicing modern monetary theory. So they continue to use that mechanism. Gold is continuing to make new highs. But the added part is China, this big push, they continue to buy gold and they continue to buy more and more gold. They're the biggest gold producer in the world, the biggest buyer of gold. And now last week, when Trump was busy in the Middle East, pushing this big $2 trillion business transaction deal, which is spectacular for America, the Chinese invited every leader from Latin America to go to Beijing, give them flight tickets, come on, and put out a $9 billion line of credit for them. They want all the gold mines. They want to have access to the gold that's in South America. So you can see these sort of rotations, and the biggest market cap gold stock today in the world is Chinese. So there are these interesting developments take place, and we get caught up with the trade war between Trump and China, Xi Jinping. But around all of that, other countries are saying that we have to have gold as support because we do not know where this paper money drama is going to go to.
Exactly. Another topic I wanted to bring up with you is, we've discussed this offline, Frank, that there's rumors that gold will be recognized under Basel III rules as tier one liquid assets come July 1st. This news has been spreading like wildfire through the gold market. The LBMA put out a statement that for now, these are just rumors. But others are speculating that as of July 1st, 2025, gold will officially be classified as a tier one high quality liquid asset under Basel III banking regulations. That means US banks can count physical gold at 100% of its market value toward their core capital reserves. No longer will it be marked down by 50% as a tier three asset as it was under the old rules. But I think it's interesting that the LVMA is saying, hold on, this is not happening just yet. What are you hearing?
Yet. I think it's in full motion. I think what's being proposed in the U.S. is to restate gold mark to market for all the gold that America owns. And what would that do to its currency to make it look stronger versus what China has and their money printing? And I think other people forget that China and India, affectionately known as Chindia, is 40% of the world's population. Fastest growing GDPs continue over the past 20 years is China and India. And India is way behind China, but it's growing more quickly. Well, their M2 money supply has grown almost 10% this year. That is pretty significant when we look at these year over year, month over month rates of change in M2, because M2 is highly correlated to demand for gold, and gold is an asset class. So if there's a wealth transfer that China and India have so much money and they're printing so much money, then you better, the other countries of the world, have some gold against the paper money, because in America, they're not growing their M2 at 10%. In Europe, they're not growing it at 10%. And now I think the idea of America reestablishing mark to market for their gold holdings would be another, on the opposite side, like the tariff war, it'd be a reset button that America has much more borrowing capacity, and therefore it has a stronger GDP for growth.
I mean, what would the repercussions be for the gold market? The impact?
Well, that 4,000 happens that I talked to years back that was going to happen. Well, now I
Yeah.
think by the end of Trump's term, gold will be through 6,000. I think it's
Wow.
very easy to see, for me, the way I look at it, that it's going to happen. And what we saw in the tariff war was really interesting, because April the 2nd was supposed to be Liberation Day. It was a tariff war against everyone. And then it gets dropped except for where? China. So really, if America came out just against China, then they would say, if there's World War III, it's negative, you shouldn't be doing this. But if America takes on the world, then backs away to the rest of the world and is trying to do separate contract transactions, but still fighting with China, that's where the real battle is. So China keeps buying the gold. China is wants to de-dollarize as a main trading currency. So this dynamic says for other governments, you better own some gold against your paper money. Another factor, in addition to the M2 money printing by Chindia.
You better own some gold against your paper money. I think that's a very strong statement.
And what's
So
really
I find that
undervalued right now are gold stocks. Gold stocks are making all-time highs, but they're really pricing in when gold was 1,500, not 3,500. So if you did a relative valuation, gold stocks can double and triple from here. So I think that tells me that this is not over. We've not gold looks short-term overbought when you look at these technical sentiment indicators, but and the gold stocks, but far from it when you look at the financial fundamentals of these gold mining companies. And you see companies like Newmont buying back their stock, increase it. It's a game changer what's going on, and we'll see the big game changer when they start not selling all their gold and start hoarding their gold like they were doing in the 90s.
So, Frank, I think it's interesting. You're saying even though tariff war talk will dampen, it will stay alive for China. But you're saying, regardless, there's enough, tension, whatnot, China buying gold to bring and lift gold to $6,000 an ounce within the next 3.5 years.
That's my thoughts when I look and try to create a matrix of factors that would drive that. If you took some of these old great monetary and look at total money supply out there divided by the price of gold or gold supply, then gold should be $15,000. Well, I'm looking at other factors and looking really focused on the G20 countries and their money supply and their fiscal and monetary policies. That they just remain very bullish for gold. And there's a greater interest. What Bitcoin has done has woken up a lot of investors that you have to have decentralized assets and you have to have them outside of the realm of governments and banks. Because what we saw in Canada under Justin Trudeau during COVID, he took away the rights of people to have a protest. And then when the trucker strike was basically for liberty and rights, they turned around and locked down bank accounts and took away your money. Unheard of. That's what you have in Zimbabwe 10 times this century have confiscated all US dollar bank accounts from citizens. That would never happen in Canada. So the thought process of the young generations X, Y, and Z and millennials are saying to the baby boomers, you have to have assets that are decentralized and outside. So we're betting on Bitcoin, but you better own some gold too. It's just wise. If you feel safer having something tangible, then you should own some gold and own some silver coins and stack them somewhere else. In Zimbabwe, there are fortresses built where they put US dollar bills in a safety deposit box. It's not the bank because they know the government will use the bank to confiscate your US dollars. And they also put gold in those safety deposit boxes. So just think of a brand new financial industry is the protection of these decentralized assets like they have caves in Switzerland for storing gold.
Last question, Frank, I just wanted to bring up because I just had our mutual friend Rick Rule on. And he said his case for owning gold is because he looks at the devaluation of the dollar. He said to me that in the next 10 years, he sees the US dollar devaluing 75% from where we are. And that's his reasoning for owning gold. Do you agree with that type of percentage?
I don't see it because we have to really rank it against other countries and other paper money that are out there. So you want to be looking at the GDP per capita growth. Those are an M2. You have to add those on because they create these nuances of doing that prediction. That just if the US dollar is going to fall 70%, these other currencies are going to fall 90%. That's just put that in that context. So it's important to own gold, against any paper currency. And that's what's happening with central bankers. They've figured this out now that they should be owning gold because they have no idea what's going to happen with not just President Trump with his tariff battle, but any other major government.
Oh, well, that's why I always say don't listen to what they're saying, like this fear gold talk, but do what they're doing, which is buying gold, and they haven't stopped.
Before we go, Daniela, I want to share with you. Every time gold had a big move, you would get out of the Chicago futures market in New York. They would raise the margin requirements for gold in the futures market to slow it down, to knock it down, because the futures market was doing that. That's a real important predictor short term of gold going through a correction. The concern that these other people are is that it goes tier one, then gold all of a sudden goes to another big level and they can't control against their paper money. So that's what's going on. So follow the futures market and what those governors are doing at those exchanges with gold.
Frank Holmes joining us this Monday for this breaking news coming out from the European Central Bank. Thank you, Frank. We'll see you soon.
And look up for gold prices. They're going higher.
That's right. And don't forget to go to DannyReport.com. There's a lot of good info you could download if you're looking to begin your gold and silver journey. DannyReport.com. That's it for me. We'll see you soon.